about some different models that you probably have heard about. An old model is a hub and spoke model. This is the most traditional, and this is where you actually just use a bunch of LLCs together, a parent LLC and a bunch of underlying LLCs underneath it. Has a high cost on per entity because you have to form and maintain all these different entities. And in California, then you end up having to pay $800 per year per entity. A series LLC is more of a cutting edge product. It allows you to do everything with hub and spoke, but it also gives you unlimited scalability for free. You can form it in one state and use it everywhere. And this is typically great for land, for syndications, for note investors that are outside of California. Series LLC is really the best vehicle if you're not living in California. If you are living in California, you can use the um, benefits of a series LLC, a series structure, but because it's a trust, it has the greater protections than an LLC. You don't have to worry about these piercing the corporate veil type issues, and it avoids the $800 per year franchise taxes. It gives you free unlimited scalability. Again, you can form it in one state and use it everywhere. It avoids those franchise taxes. And one of the issues that runs into it is that when we're using these types of advanced structures, that if we finance them inside of the entities, we have to use commercial financing. However, there's ways to get financing outside of the entity and then move it into the entity structure after the fact, wherever that might be necessary. There are other structures that are applicable. So, like limited partnerships, for example, are great to be able to protect assets. They work very much like LLCs, so they're higher cost. We can also use offshore LLCs. This is typically if you're really in thinking that you might be sued, or you're over 5 million in total net worth. These offshore LLC protections can be very, very great. And then the very strongest protection you can actually get is going to be an offshore trust. However, these types of protections that come in when we go offshore is like getting that last 3% of protection, but they're hugely more expensive than the onshore protections. So for everybody here, what I would recommend doing would be the Delaware statutory trust if you're located in California, and whether you're doing notes or anything else that you're doing. And I have a slide here that will show you for the DST a little bit about how this works. So this is the overarching diagram. This is what took me a number of years to put together to create the most streamlined entity structure possible. So a couple of things here to note. You'll see here that there's two different sides. So there's one side, which is your asset holding company side. And this is going to be the asset holding company, means that it owns everything in your life: brokerage accounts, stock accounts, all of your assets, etc. And then you also will have an operating company. And your operating company is the entity that does everything, but doesn't own anything. So during your life, your rents that you're signing with your contracts, your lease agreements that you're signing with your tenants, any contracts that you're signing, communications that you're making, you'll make all of those through your operating company. Then inside of your asset holding company, you have a parent entity, your parent trust. It creates its own individual child series. Each of these child series are treated like different legal entities for liability purposes. And then the assets are typically hidden behind a trust, some type of land trust or anonymity trust. So the asset holding company itself is anonymously owned, and the assets can all be anonymously owned. And if there's a lawsuit against one asset, the child series blocks the liability to be able to only affect that asset and not any of the other assets. If somebody sues your operating company, well, the operating company doesn't own anything, so you don't lose anything there. And then you don't actually own anything at all. Just like rich people, the rich people that we hear about, they don't own things. They have entities that own things for them. So you could get into a car accident, somebody could threaten to sue you. They won't be able to take anything that you own. And this way, you're able to create the ultimate type of asset protection. Now, underneath the operating company is where you're going to see things like some of these that we've talked about here today. That's where you'll have their self-directed IRAs, your solo 401ks, your defined benefit plans. And the reason they're under the operating company is because these types of entities typically need active income to be able to be funded. So you can create passive income inside of your asset holding company. Then your operating company can then charge a fee for services rendered to the asset holding company. Thereby it converts to active income, and then we can fund these types of plans. So we're getting a little bit ahead of ourselves as this starts to talk about like flow of money and taxation and tax vehicles. But I wanted to take the opportunity to show you about how you can take your parent trust that you can form. You can compartmentalize every single note you own into its own child series. Remember, it's infinitely scalable. They're all free to create, one after the other. This same type of system can work for single family homes, your brokerage accounts, your extra cash that you're holding. All of that can be held inside of this trust that's domestically formed here in Delaware, and that this trust can be used anywhere inside of the United States, and that the trust and the assets themselves are anonymously owned, which is important because what we want to make it look like, if anybody ever looks to sue you, that you don't own anything. Because if it doesn't look like they can search public records and say, oh, Bobby owns 8 properties and they're all in his name here, well, now Bobby looks like a pretty good target. But if it looks like on paper, if anybody's doing research, it says, nope, Bobby doesn't look like he has anything in his name. And now all of a sudden, Bobby's not a very good target for the lawsuit. Anything you'd need to do for financing purposes, et cetera, we'd be able to show them the underlying paperwork to be able to show, here's the assets in terms of like a balance sheet or otherwise your P&L statements to be able to prove income for for loan purposes or anything of that sort. So I'll tell you a quick story to be able to illustrate how does this work. So I had a client of mine who was flipping properties, and part of the flips that she was doing in the properties had to do with replacing some plumbing that was underneath the house. So part of replacing the plumbing underneath the house, there was some email exchanges back and forth. And in the email exchanges that were back and forth, there was some confusion about whether it was all the plumbing in the house that was replaced or just the plumbing that was underneath the house. Now, the buyers went on vacation after they bought the property, and it caused $75,000 in damage and water leaks, which they found out when they got home. So what do people do when they're mad? They try to hold somebody else accountable for it. And then so they tried to sue my client. Luckily, she was using a series structure just like this DST and was using an operating company. And this became absolutely essential because, one, my client didn't lie. She's an honest person. And luckily, she had heard me talk about on my podcast about how being honest is not a defense. And honest people get sued all the time. And in fact, honesty won't do anything for you because the other people will just lie about it. That's the nature of litigation. I know because I was a litigation attorney. I got to see firsthand what that's like. So the attorney came and he said, well, we're going to sue you for $75,000. I said, well, that's great. You're welcome to do that. However, I think you're going to run into problems and probably waste a bunch of money. So, well, how do you figure that? I said, well, you can either say that in the email exchanges that she lied, but those email exchanges that you're relying on all came from the operating company. So if you sue the operating company, there's no assets there. So you could win the lawsuit and you spent $50,000 on a really expensive piece of paper that's not going to get you anything. Or what you could try to do is sue who sold you the property, which was the child series of her series structure. But the problem you're going to run into there is that we've already distributed all of the money out of the child series before you threatened a lawsuit. And therefore, there's no money in that child series. So if you sue that, you're not going to get anything either. And you might be able to try to find a way to be able to sue my client personally, but all of our assets are protected inside of these structures. So the net result is that $75,000 lawsuit just got dropped. Now, why is this important? Because without a structure in place, what would have happened was likely a $40,000 to $50,000 settlement. Average settlements are typically about half of what the claim is, and over 90% of cases will actually settle. However, because we had a structure, what we were able to do is disincentivize the business of the lawsuit. We were able to show them that even if they were to win the lawsuit, even if all of the facts of what happened were exactly as they said, they still would walk away with nothing. And that's what a proper structure actually does for you. Because the last thing you want in life is to be able in a position where you're trusting 12 random people off the street called a jury to be able to decide important matters with your financial future. And so these types of investments in the legal structure not only give you the peace of mind at night, they also save you tens of thousands of dollars, since over the, we defend about a lawsuit a month with our clients. So these lawsuits are actually happening all the time. Although they might not happen to you all the time, they will happen eventually statistically. And the net result was that my client, even though she got sued, she didn't lose any sleep over it. Said, great. I already know that I have this kind of protection that's here in place. This is just another thing that's happening in life. Most of the time, and you can look at these statistics, even if you wanted to Google them right now, what you'll find is that lawsuits are in the top 3 things that are the worst things that can happen up or with you, like with a major medical issue or like a divorce. And the reason why is probably not too crazy to think about, because you're under attack. And what happens is that your nervous system and your body immediately goes into fight or flight, and you stay there. And you stay in this fight or flight type of state of being for months or sometimes even years while this thing is dragging on and while you're racking up attorney bills and everything. So not only does asset protection make sense in terms of just a pure financial play, but it also makes sense in terms of, how do you bulletproof your life in such a way that random things can't just pop up and derail the experience of your road trip. You can continue going on the road trip, doing the things that you plan to do without having this thing hijack your focus of attention and cause you all the stress and anxiety and everything that comes with that.